John, between this jobs report and what we heard from the Fed chair, is the Fed now off the table as a main cause of volatility in the markets?
John, I'd have to think that this certainly helps a lot. I think what we had here was the Fed essentially circled the wagons around the market right now. It made it very, very clear that the Federal Reserve continues really in the Bernanke legacy pattern that was followed by Janet Yellen. And I think Jerome Powell is doing his own version of it, essentially increased communication, good transparency, a dialogue within the market, and improved communications. And I think that's very positive. That's why we saw the market react as well as on the non-farm payroll number, of course.
And so, Tom, at this point, to what extent does your attention turn to the underlying U.S. economy? The strong jobs report for December is one thing. On the other hand, just hours ago, it seems like we heard from Apple on how the Chinese economy and a pullback with the Chinese consumer affected them. Are you mainly watching now to see how much of that trickles through into the U.S., if at all?
Yeah, it's funny. I would actually say it in the exact opposite way. It's how much of your attention is now being diverted away from the economy. I mean, I think what Jay Powell just told us is that the equity market matters. And maybe it matters even more than incoming economic data, because the reality is we've been printing job growth that I think can only be described as really sturdy for really the better part of the last couple of years now. And so I think if this was just an economic data story, I don't think we'd be hearing people like Loretta Mester, who is really more of a hawk, say today, this morning on your channel, hey, by the way, we're thinking about maybe pausing. So I think it's actually much more than the economic backdrop. And look, make no mistake, you're speaking to someone who thinks the economic backdrop is actually pretty darn good. But I don't think that. I think that takes a back seat. I think that takes a back seat to the equity market right now. So it's funny, if you look at our official call for funds is that you'd have 2 more hikes this year. But I think that as a practical matter, I have to wonder if we have any hikes this year. In fact, I think the only way you actually get to a hike scenario again is if the equity market gets to a point where you actually start to experience some stability, where the equity market is sort of pacified to some extent. I don't think that's how policy should be built, but I think that's where we are right now.
You seem to be saying that you hear a fundamental change in what the Fed is saying, as opposed to just them saying, hey, we're flexible, we're not stuck in one particular way of thinking, maybe not just trying to pacify the market, saying that they're not on autopilot, both on rates and on unwinding QE, but you think there really has been a change here in what they're actually going to do.
I think that there's been a change. Whether it's how the depth to which there has been a change, we can all debate that. But I don't think there's any question that there has been a change in the general approach by Jay Powell, which is to say, this was a guy in the middle of the year that was actually talking about things that looked really good. He's talking about this, the notion of the Phillips curve, which, look, I don't believe in, but it's part of the Fed mantra. So he was talking about it in this sort of fundamental way, and now we've seen this shift where he said again today specifically that the market knows more, is telling us more than the data are telling us right now. I think that there's been some shift in thought process.
John, you've got U.S. officials headed to China next week for more trade talks, given the jobs report number we got today, given some of the comments from the Fed chair today. Is that the biggest wild card for the markets moving forward?
I think so. I think the next thing for the market to focus on is the meetings in China, and beyond that will be fourth quarter earnings season. And right now, based on what we just had today, I think we've got a lot of positive things, including a very, very strong stick put in the spokes of the argument that there was going to be a recession and that the Fed was going to author it. So I think we're in pretty good stead right now. I don't think we're out of the woods. This whole thing with China is a longer-term road. It's complex, but we do think we'll get some kind of a material agreement out of China, or with China, let's put it that way, because you've got, for China, it's a goal of 2025, even if they move that out a little bit. It's made in China 2025 could be very much disrupted by a protracted trade war with the U.S. And so I think they're going to want to avoid that, the slowing of growth there, the debt problems that they have. All say they should do a deal. And for President Trump, you've got election 2020 coming up. That'll happen faster than you know it. You want to move on your agenda items. So we think it looks good, and we think the market is celebrating this. But we still are at a point where there are plenty of skeptics around, and the bears are still growling. But we think the bulls have got a really good chance here at proving a solid case for the markets to move higher this year.
So given that, John, are you similarly skeptical that the Fed hikes at all in 2019, as Tom just said?
I think, John, I think we're going to see the Fed hike in December of this year, much like when Janet Yellen hiked in December of 2015. The market protested that somewhat, and I think she showed some sensitivity to that, as well as to the risks to the economy. And she waited until the following December to raise again. I think we'll likely see that. If we get an agreement with China, we're going to see a readdressing of a lot of people's thoughts in terms of the U.S. economy, with the implications of a protracted trade war taken off the table. You never know, they might do two, but I think from where I'm standing right now, we'd say one hike and probably in December.